So what would be your best advice for a beginner getting started now?
Yeah, that's obviously one of the most important questions that a lot of people ask themselves. And they ask like, hey, what should I learn? Usually they come from an angle saying like, what method should they learn, right? And then you hear ICT, SMC, like whatever this guy did, he definitely left a footprint on the retail trading world. The ironic part about this footprint is that at least people more clueless than really helped, because it lacks so much definition to what it actually is. And that's why people interpret it in all the different ways and are more or less left helpless with it. And that's what the reason I'm saying that is not to trash or bash it, even though I am. It's basically that's what people should start with. They need to learn how to build a structure that actually has a chance to win. You know, I said it before, I say it again. There's two components to successful trading. One is to have a strategy within a structure that has a statistical edge, meaning that over an amount of trades, it's going to be a positive result, which is proven by backtests. Even backtests, you know, they only give a probability. You can over-optimize backtests. There's a bunch of pitfalls on that side as well, which I'm not going to get into right here. We can do that in a separate video. But the other side is you need to also have a strategy that works for you. If you don't have a strategy that you are able to do, then you could try all your life. You know, it's like the great example, you know, if you judge a fish by its ability to climb a tree, it will always think it's stupid. So it's important that you understand, okay, what is, for lack of a better word, the physical structure of the building that I want to build? What needs to be in place so that the building actually will hold, right? And be robust. And then the other thing is that, okay, what kind of building do I want to build? Like, and what environment am I building this building in the first place, you know? And when you, that's what I would tell to beginners. Understand strategy development before just trying to copy something, because as you copy something else, there are so many inconsistencies that you have no idea about at this stage. You have so much ignorance in you because it's simply something you don't know. Nobody ever taught you. It's not your fault. Nobody taught you that. And you don't see that also in like the regular normal education out there. Most people, they just come up with some sort of trading scheme that they more or less put together or stolen together from other things that they have seen. So this is why I always say, if you learn from a retail trader, it's the blind leading the blind. It's just a merry-go-round of recycling of the same shit, different toilet. And that's really the problem here. But when you learn proper strategy development, you understand the 7 building blocks that make your structure to be robust and the statistical edge that allows this structure to be profitable over the long term. Then you get an aha moment, because now you can go with that structure and apply it to different markets, different time zones, different approaches. You can trade it with the trend, against the trend, short term, long term, crypto, forex, stocks. It really doesn't matter, you know, because all of these things, obviously they will differ in their details of that, but the underlying principle will be the same. The physics of your approach are the same. And my advice to people is exactly that. Learn to build a proper strategy that works for you. What about you? How do you see it?
Yeah, no, I think you have it spot on there 100%, because a lot of the time what's happening with people as well is they have so much chaos of information. You know, they're reading every book and watching every YouTube video and grabbing a strategy from here and maybe even pairing bits together. And they've all this chaos. But, you know, if they really actually learned the correct methods and foundations and got themselves a mentor, for example, you know, the mentor alone is going to be able to help them structure that chaos through systems and structure, understanding strategy development as a whole. And
actually, just a short example to that is that, for example, when you try to build a strategy and you just say like, hey, I want to do order blocks, I think they're just great to give me an entry trigger. Then when you have the right mentor, that mentor will ask you, okay, how do you define an order block? What is the criteria of the order block? What is the exact definition of your trigger? Is it this time frame? Is it that many candles? Is it this size of a candle? Is it, well, what is it exactly? And then as you think about to answer that question, you also need to go back on the chart to see what is actually the trigger that I'm looking for that has worked in the past as well. You know, and then you can still take the bits and pieces of other ideas and approaches, but put them together in a right way for them to actually become usable. Sorry, I interrupted you, but I thought that was very important.
No, for it's very true, because, there's actually a very good exercise that they can do over this as well, which is simply actually, shut down your laptop and get a sheet of paper out and try to actually write down, as if you're explaining to a 5-year-old in very, very clear detail, what are you looking for? Because if we take the order block example, they may say, it's the last, whatever it is, engulfing candle or last swing point of, each pivot. And what they'll find is when they actually go in and they look then on their charts again, they'll start to see all these different variables, and they'll start to see that, hey, what I did classify, there's actually more to this. And what that causes them to do is it causes them to go and actually find what are the different types of variables, understanding them more, putting structure around them so they know what are the more higher probability ones or the lower.
Gather data around them.
Exactly. And then being able to adjust their risk accordingly, not just based off of feeling, but based off actual hardcore facts.
Yeah, and numbers don't lie. I love that. That's so true. So yeah, even though now we might just have blown someone's beginner's mind with all this input, that's how it works. That's literally, again, that's not even a matter of opinion. That's just a mathematical equation. If you do these things, they will have a certain result. It's impossible not to have that.